I'm so excited for this conference. It's something we've been planning for a number of months. We held our first Amplified conference back in the spring of 2020, amidst the pandemic. The last year or so has been really challenging on brokers in so many ways, and so we for this conference, we wanted to put something together that touched on so many different topics that were relevant to brokers, especially in the light of the pandemic and kind of everything that's going on. And that's really where we wanted to kick it off today. So again, thank you for participating. So many attendees. Like Thomas said, we're 700 attendees, registered attendees for the conference. Big thank you to our sponsors. Take a look at the agenda. We've got some remarkable speakers. Like I said, touching on so many topics. But to kick it off, we're going to start with the CBN CEO panel. I've got a few amazing broker principals that are going to be joining us, that are going to answer some tough questions. I got a cool list of questions that we're going to tackle to get things started. And of course, these questions are going to be touched on throughout the entire conference. So let's bring in the rest of the panelists, and we'll do a quick introduction for everybody. All right. Looks like we've got all the panelists live. Can you guys hear me?
Yep.
Yeah. All right. Awesome. So we've got Jeff Roy. Jeff is probably one of the most well-known figures in the industry. Principal at Excalibur Insurance. We've got Bruce Rabik, who is the CEO of Rogers Insurance, one of the founding members of CBN, and Brooke Hunter, who is the principal of Hunter's Insurance, based out of Toronto. Again, a member of CBN, and each panelist was handpicked because they come with a different expertise to be able to kind of round out all the all the questions and the topics we want to cover today. So if you guys are ready, let's get it kicked off. So first question for the panel. 2020 started off as a great year for most brokers, and then quickly took a turn for the worst with the onset of the pandemic back in March. How do you guys think brokers have fared with respect to the pandemic and the challenges that it's brought? So if we can start with Jeff, move on to Brooke, and then Bruce, you'll round it out at the end there.
Thanks, Sherif, and thanks for inviting me to be on Amplify. I think it's a great platform to help brokers, and the more we help each other, the better everybody gets. So I think brokers honestly have fared quite well. I was, everybody was doom and gloom. I think everybody looked at the worst possible case scenario in March. I know when I flew back after being stuck in Mexico and had to quarantine for 14 days, we're looking at every bad scenario and looking at the possible worst. If your business went down 30%, what would you do? And the good news is most brokers have adapted very well, and it turned out to be a really good catalyst for change. It accelerated a lot of digital trends that were already there, and it forced brokers to use Zoom meetings to get people working remotely, to hire people remotely. And I look at that as the ultimate stress test. And I don't think anybody perfectly had everything in order, and if you did, I would maybe call BS a bit. I think no matter how adept you were, there's still challenges that came out, and it's really easy to run your brokerage or to sail your boat when the sea's calm, and it's when it's rough that really figures things out for you. There's a few industries, if you had niches in hospitality and certain areas, very challenging year, and a lot of brokers had some tough things. So if that was a big part of your book, that was very tough to overcome. But a lot of people did some very courageous things, and I think everybody's done very well. I think all our teams in the industry and all the brokers have done a really good job, but it has been very stressful. The brokers where the tire hits the pavement, and our team have got kind of beat up a bit from our companies and from the industry a bit. So I want to thank all the brokers out there and the teams for all the hard work. It's been a very difficult time. I can't thank my team enough. So, I think overall not bad.
Brooke, over to you.
I certainly agree with those reflections, and I would add that at first, insurance brokers, I think, took a big brand hit, if you will, because of business interruption expectations and expectations as to the immediacy of insurer response for COVID relief. I think we're still recovering from that brand hit, but it is precisely because of the measures that most brokers were able to step up to that I think we're recovering nicely from that hit. And in fact, at the end of the day, brokers have been the front line of client communication for some extremely difficult issues. And consumers seem to have come out the other end of some of this, respecting that role.
You bring up some really good points, Brooke. I mean, the whole issue around business interruption was super challenging. Still is super challenging, especially with we know the UK Supreme Court just ruled on it in England that it's going to have reverberating effects. But I think brokers dealt with it quite well. You're
through
right.
Honesty and trust.
Yeah,
right.
Great points.
Yeah,
Bruce.
Well, I think my colleagues have summarized it pretty well. I just, take on the theme that Jeff touched upon. Brokers have been stress tested, as our environment got stressful, both in the financial crisis of 2008, through various catastrophes. I speak from experience here in Alberta, apparently the catastrophe capital of Canada, and now the year of COVID. And as evidence that brokers are handling it quite well after the financial crisis of 2008, and after a very slight pause for only 2 months in 2020, the flow of capital into brokers has been enormous. We're talking about billions of dollars. So that's a theme we'll touch upon a little bit later. But I just note that as evidence that brokers, as the perception by financial investors is that brokers are very, very resilient.
And you'd probably agree, Bruce. I mean, we've seen this on a number of different presentations and whatnot, that it's quite possible that the insurance brokerage industry is the greatest industry in the history of mankind for a number of reasons. For that, the resiliency. No other industry is proven as resilient as the insurance brokerage world.
The greatest industry done right.
Done right, exactly. All right, all fantastic points. Kind of sets the foundation for some of the other questions that we're gonna get into. So coming out of the pandemic, what do you three think brokers have learned the most? And what are the top 3 things brokers need to focus on in order to keep their brokerages successful? So Brooke, we're going to start with you and then turn it over to Bruce, and Jeff, if you can round it out for us.
I think the number one that I came up with is clear communication. Clear communication to clients in plain English, in a timely fashion, to manage expectations. That is number one. Number 2, did I say clear communication? But at this point, I was thinking in terms of communication with our colleagues, in terms of expectations and boundaries within an environment that's a remote work environment that was brought into relief. Thirdly, it used to be that IT investment or information technology investment, information management investment was something that ebbed and flowed. It is a constant. Every year, there's going to be a material budget attributed to this factor, and that is an ongoing reality for best-in-class brokers.
Awesome. Great points. Bruce?
I entirely agree with Brooke, but I do worry that brokers haven't learned a lesson. I mean, there's lots of exceptions, lots of brokers who are doing exceptional things, lots of brokers with innovation, but the pace of brokers selling out, which in a lot of ways is them giving up. It shows me that a lot of brokers haven't learned anything. They haven't put in succession plans. They haven't invested enough in technology and so forth. The three things that I think are very, very important for brokers, I think the first one is quality people. Never has that been more important. The second thing I think is quality people. And the third thing I think is quality people. And the reason I say that, almost nothing else matters. The difference, used to be that we hired people to sell insurance. Now we try and get quality people to build websites, to do social media, to do research on various industries. So it's still all about people, because while the technology is becoming incredibly important, still the technology hasn't yet replaced anything important that people do. It only accentuates and helps us be more productive so far. So
I couldn't agree more. I mean, even in the you nailed it. Even in the technology space, whether you're a brokerage or you're a tech company or whatever, it all comes down to the quality of your people. That they're the ones that are building the technology to get it out. They're the ones that are looking at the policies for the insureds. They're the ones that are doing the tweeting and the Instagramming and whatever other platforms. You're 100% right on that, Bruce. That's a great one. Jeff?
Hey, great, Brooke and Bruce, great points. A wise person once said the quality of your life is how you communicate with others. So communication is always key, and staff is key. I've kind of overlapped some themes, but number one, culture, which comes down to people. They always say culture eats strategy every time. Our people right now are the ones who are reducing friction right now because our technology can't do it. And I'll talk about my second point quickly, but our people, they've had to learn to work remotely. People need human interaction, and they've had to leave that human interaction. And I give an analogy like a plant. Plant does really well when you get sunlight, fertilizer, and water. Our people have lost some of that sunlight by having to work from home, and that a whole osmosis process. When you're around people in the office, things rub off on you. You know what's going on. You just connected that much better. And I don't care what anybody says. Remote working is great, but it's not no substitute for being actually physically in your building. So I think there's never been a time in human history that culture is that important. Understanding what your values are, why you exist as a corporation, those things are really important. So I think it's important as a manager and leader to make sure you're really driving that culture. The second thing I point out is reducing friction. We have a ton of waste right now where we're doing double entry and portals still. It's 2021. Like, I can't believe I'm using a portal for personal lines with any company at this point. That we should be appalled by that. The good news is there is a lot of great initiatives I'm a member of IBAC, Tech Committee, and IBO, where we're trying to reduce friction by connecting APIs. So there's some good stuff being done. The broker's voice is being listened to. We're not a happy afterthought. We're part of the conversation right now. So, and Sherif, you're a prime example of a vendor doing some great things to help connect brokers and companies. And the last thing I'll point out is KPIs and metrics. A lot of people were trusting their gut, or they had a report they ran once a month on their BMS system to see how things are going. We need real-time metrics, a dashboard, a scoreboard, so people can get feedback, how they're doing in the moment, how they're doing that day, how they're doing that week. And unfortunately, the current systems aren't stellar for that. And as a business owner, you need some KPIs in your sales department. There should be 3 to 5 key metrics. In your service department, what are your 3 to 5 key metrics? And then your marketing. And if you can't quantify things, there's no way you can improve the levers to improve them. So I think data and understanding your KPIs are really critical for brokers to get to that next level.
Yeah, all really, really valid points. I actually really like the first one, Jeff, about the culture and and whatnot, because again, as the year kind of went on, at first everyone's excited. It's kind of this new thing. It's novel. We're all working from home. Everybody's working from home. You're kind of you're wearing your pajama pants and a dress shirt. You're comfortable at work. And then as time went on, and I think we all saw it in our brokerages, people really started to struggle. They really started to miss that human interaction. You know, the water cooler talk and seeing their colleagues bouncing ideas really easily off a colleague. A lot of that was missed, and I'm hearing that a lot more from brokers. So, you know, all fantastic points. Okay. You guys are making this really really easy, and I hope for everyone who's listening, I hope this is all resonating, because they're all fantastic points. So for the next question, Brooke, I'm going to start with you again, you know, and then we'll turn it over to Jeff and Bruce. So prior to the pandemic, there was already a hardening market in commercial lines. Well, a lot of lines were affected, but commercial for sure was affected the most. And it seems that the pandemic has definitely accelerated the market hardening. What do you think this means for brokers? And in your opinion, you know, how long do you think this is going to last?
Well, dealing with a hard market really does speak to Bruce's earlier point around people, right? And the whole talent question and experience question gets elevated in terms of priorities. And the thing about market changes, this one sort of crept up on us. In 2000 and I'm going to get my years incorrect. In 2019, it was already the market was becoming difficult, but it tended to be for specific classes that had some chronic claims issues underpinning it. And then first quarter of 2020, it became extremely difficult for some classes. There were some canaries in the coal mine, but not many. And in my experience, and I've been around a while, these things happen really quickly, and then they soften really quickly. And we need to be watching for those canaries as to when it's going to soften, and it'll happen really quickly. And will it happen in 2021? Based on the cover of the report on business in the Globe, was it yesterday, talking about 2020 insured losses being the fourth on record for Canada. 2021 will continue hardening, particularly by the globally financial lines, and excess liability will be more than just a 10% rate increase. It'll be tough to place. 2022. Anyone's guess, but pay attention to the canaries.
Okay, awesome. Jeff?
Every time I hear canaries, I get scared because I think tech canary, but no, I think good points, Brooke. I think, you know, I was projecting 12 to 18 months originally when I thought that the hard market would start to soften, but the longer COVID goes on and the longer it takes to get COVID to flush out of the system, it's going to just push back the hard market. Now, I feel that the COVID, what it did, it accelerated trends and it made certain classes unfavorable quickly. And I'm not sure how quickly those trends are going to come back. The longer our government continues to keep certain businesses shut down, you know, as a business owner, it's a struggle when you see a retailer shut down, but yet Walmart and the Costco can retail stuff there. There's some really tough decisions on safety and stuff like that, which I won't get into that debate today, but there's some real tough issues out there. And I think the longer it goes on, the more it's going to be a little bit unpredictable. The second thing is, what if we have some catastrophes? You know, what's going to happen? You know, we're going to have some major uncertainty in the U.S. I think we have to look at the political climate down there. Is everything going to be good after Wednesday, or is there going to be some fallout there? And you know, when the U.S. sneezes, we get a cold, as the saying goes. So, is there some political risk up here? Really hard to say. And then we also have obviously environmental disasters or weather related. Are we going to have some severe weather in this year? And if we get some severe weather on top of what's going on, it's going to be tricky. And companies, I don't think were able to get the rate they wanted last year because of COVID. They've had to soften their stance, so they didn't quite get up to rate adequacy as fast as they want. So it's going to be interesting, but I would say a good 12 to 18 months, depending on what happens with the weather and the political climate.
Good points. Bruce?
Just a couple of facts that everybody's probably heard. 2020 was the worst fire season in northwestern and western United States on record. 2020 was the second most active hurricane season in history. As already noted, we have the business interruption claims, lawsuits, and everything that'll take years to work their way through the system. And there was a report out of Lloyd's that the impact of COVID on the insurance industry is probably north of $200 billion worldwide. So, yeah, the hard market's going to continue. The market's going to get more complex. We're already seeing a hardening of cyber insurance. And, you know, I'll leave it at that because I think Jeff and Brooke touched upon just about everything. So
Bruce, I'm going to expand on this a little bit because I'm sure it's on the mind of a lot of brokers and brokerages. You're the CEO of Rogers Insurance. Rogers would be one of the largest brokerages in the country, of course, part of CBN, even a larger entity. How has a lot of brokers have this sense that the bigger you are, the easier it is to place business. Would you say that even for a large broker, this has been, the hardening market has been quite challenging?
Yeah, I heard once, and it turned out to be true, that the very largest brokers, and in London, the best paid people are often not always the people that sell insurance or the people that have the customer relations. They're the chief brokering officer. And Rogers has certainly learned that over the last few years, the importance of brokering and the importance of our relations with our insurer partners. But yeah, it's with the increasing consolidation of the industry, Rogers at its size is, we're in a death match on accounts every single day. We represent, over 120 insurance companies, underwriting facilities, Lloyd's syndicates, and yes, we're struggling placing insurance on certain lines every day, just like our competitors are. So yeah, it's pretty tough out there. And I think that is true of all sizes of brokers.
Yeah, and I think that's what a lot of brokers really needed to hear, is that the challenge is right across the industry, and it goes back to what you were saying earlier about the people, the quality of people, the relationships that you have with carriers. The better the relationships, the better the your people are able to broker those risks, the easier it is to place the business. But it's still a challenge, no matter what. It's not, it's not like when it's soft, you'll have every market offering terms for any piece of business.
Sherif, Brooke is desperately trying to say something.
Oh, sorry. Go ahead, Brooke.
Hey, before the pandemic hit, and maybe this was early 2019. Maybe late 2018, when Lloyd's did their big review and shut down 8 Lloyd's syndicates, a number of which had heavy positions in Canada. And this is business insurance and some personal insurance, no auto. And perhaps a canary is that there, within the last month, there are 3 new entrants into financial lines in Lloyd's. So, I mean, we've got to watch carefully and just be aware of where the softening may be, where capital is being applied, and we'd better be nimble and be ready.
Yeah, and where there's challenges, there's also opportunity.
Yeah,
and so as people exit, there will always be new entrants. And I didn't even know that, so that's a great point to make, Brooke. Okay. We're gonna, since Jeff touched on the political stuff, Jeff, I'm gonna turn this one to you to start, followed by Bruce, and then Brooke. So a lot of governments right now are talking about, domestic governments, provincial governments, are talking about forcing carriers to change up some of their policies to help more businesses, with the businesses that are suffering because of the pandemic, and open up capacity in those challenging lines as well as other other lines as well. We've seen what this has done in the past, namely in auto insurance in certain provinces. And from experience, I can speak directly to Alberta and the challenge that caused, by putting the rate cap in. Is this a risk that brokers should be aware of? And what can brokers do to help manage this? Oh, you're on mute, Jeff.
Oh,
there you go.
Can you hear me now?
Yeah.
Perfect. Yeah, in Ontario, they came out with the new thing called Be It. You gotta love insurance because everything's an acronym. Nobody can come up with a name. They have to have 5 names, but it stands for Business Insurance Action Team, and it was put together by Insurance Bureau of Canada to try and find capacity for the hospitality issues for restaurants, bars, pubs, and banquets. Now, I have not heard. I've actually reached out to Colin Simpson a couple weeks ago to see how that's going. I'm not an expert. Brooke maybe can tell me more about it, but they're trying to help find capacity right now because those industries are really struggling to find somebody to write their businesses. And again, most of them are closed again in Ontario. So very, very difficult. So the government's going to jump in when, I always say the MPs are your last, or MPPs are your last line of defense. By the time somebody shows up there asking for a problem, it's bad, and everybody else has failed them at that point. I don't know if it's quite to that extent, but certain lines have got really, really difficult. And again, if we don't manage the risk in insurance, at some point the government will step in. And we also have the overarching look of auto insurance looming in Ontario. Our prices are still high. A lot of refunds have come out, but I believe the product's going to get reviewed once COVID opens up, and or once COVID gets looked after or resolved to some extent, it'll come back on the burner. The one thing about government intervention, it's kind of a double-edged sword. The government jumping in prevents new entrants from coming in and protects the industry, but it also can make it difficult for some of the companies in terms of profitability. So kind of tricky at that point. There is some talk too about them reducing regulation, the regulatory environment for certain lines of business, and which would allow certain insurtechs to come in a lot easier. That's what I'm watching, because I'm worried about an insurtech that gets into insurance that could have lethal consequences. It only took one Amazon to dominate the industry, right? So that's what I'm seeing anyway.
Awesome. Bruce?
Yeah, I think the overall topic is government regulation, government intervention into the marketplace. And I think it's quite clear that governments are becoming a lot more active on this. There's changes in, Manitoba with the accord there with brokers. In British Columbia, moving to no fault is going to have a pretty significant impact on brokers. No fault seems inevitable in Alberta. It'll take a couple of years to transition to that. And, a particular concern, again, both in British Columbia and Alberta, is best term pricing. The government intervention right now on strata and condos looks likely to continue into other lines of insurance. In Alberta, the superintendent's office is investigating that practice in other lines. So government intervention into our industry appears to be increasing. I think governments are under pressure, especially because of COVID, to be much more active in overseeing the industry. And so, yes, it's something all of us should be paying attention to.
Brooke?
I think that in a country where in every province healthcare is funded by the government, we can expect that car insurance and the associated accident benefits will continue to be part of the security net that is connected to healthcare, and that it will be a constant source of tension in this country. I think that there are underlying a number of these issues are public policy issues, or perhaps failure of public policy. And I'd suggest that the whole strata issue in the West speaks to some building code failures some time ago. And somehow we need to get ourselves out of that. And I'd suggest that there is some combination of government and insurer solution to be able to address that, and flood as well. Those living along the Red River and the zoning associated with that, and managing risk for those families is another example where a combination of government and insurer response is going to be what we need to do. And I do think that speaking to the issue of hospitality and what drove that BAT situation, hospitality has been a very tough risk with serious claims issues chronically for decades. And it should be no surprise to us as an industry that upon the market hardening and COVID hitting hard, that this is one of the toughest classes out there. So perhaps we'd like to be, as a community, a little more proactive, spelling out for consumers in those spaces exactly what the issues are on an ongoing basis, not just when it hits a crisis. And I think that can also happen through industry associations. We should have a better voice.
Are any of you concerned, though? And so what I'm trying to get, one of the things I'm trying to get at with this is, is anybody concerned that the actions of government, by forcing carriers to do certain things? I mean, they've got their working groups, different working groups and different regulatory bodies, but a government actually going to carriers and saying, we're going to force you to provide this cover or pay out these, certain claims or whatever. Are you worried that in an already hardening market, carriers are going to look and say, okay, we're just going to pull out of certain lines of business, or we're going to make it extremely difficult to place any of that business like we've seen in the past? Are any of you concerned about that?
Regulatory risk in this country that likes regulation is very real, and like any professional service provider, an insurance broker needs to look at the sectors in which they play and the regulatory risk in relation to that sector. A broker that specializes in, for example, hospitality or long-haul transportation needs to have an in-depth handle on how the government perceives their role within those industries, and what the dialogue looks like between government and insurers, being the IBC. It is, in Canada, I will say, regulatory risk for every insurance broker is very real.
I'd agree with Brooke, and I'd just like to note that a generation ago, brokers had a very effective lobbying force, and they, at least the belief is that they effectively stopped the banks from getting into insurance. I mean, I've always argued that was a false battle and that brokers wasted their gunpowder on that battle. But I think what you're seeing today is brokers have way less lobbying power than they used to. And that's a reflection of the consolidation of our industry, the fact that more and more of our industry, frankly, is owned by Americans who probably aren't as attuned to local politics. And so the brokers associations have become pretty ineffectual in lobbying governments. And the job is now really up to insurance companies who really don't always have the same agenda that we do. So, I think that's something like the Canadian Broker Network, which is, a gathering of independent brokers across the country. I think there's a vacuum there where CBN and it could play a role, for example.
Great, all great points. And I mean, we also have to remember that, part of what makes our industry so great from a broker's perspective, and especially from a broker's perspective, is that it's that fine balance between the regulations that makes it is a kind of a barrier to entry. It makes it a lot tougher for new entrants, but that's also not a great thing either, especially when we're talking about insurtechs and whatnot. So all great points. And there are different regulatory bodies that are looking at different models, consultations with the industry, whether with brokers or with carriers, to find different ways. But it is always going to be a risk for brokers, for sure. Next question, and I'm actually gonna skip one of the orders of the questions here, because Bruce, you touched on this, so we'll just expand on it a little bit more. So we'll start with you, and then move on to Brooke and Jeff. Over the last few years, M&A activity has picked up, and we have seen a lot of consolidation in the industry, and it definitely seems that because of the pandemic, that consolidation has accelerated. And it's not just consolidation for brokers, but it's actually where we're seeing consolidation in the carrier space as well. What impact is this consolidation What impact is this consolidation having for brokers?
Well, Sherif, you mentioned that insurance brokering was the greatest industry in the world, and I just want to pay tribute. That's a quote actually from John Wepler, the president of Marsh Berry, the consulting firm, the American consulting firm that's been more involved in M&A activity in North America than any other organization. Again, it goes back to the stress test of brokers that, 2008, economic turmoil across North America, COVID, other disruptions in the economy, catastrophes. And what capital has noticed is that insurance brokers are remarkably resilient. In other words, if you're a terrible broker, likely 80% of your clients are going to come back next year. If you're a great broker, 92 to 94% of your customers are going to come back. And there's really no other industry that has those characteristics. So suddenly capital, which is awash in the world, is looking around to park someplace, and it sees insurance brokering. You don't need to invest a lot in equipment and machinery and buildings. There's lots of stuff happening digitally, but it has not yet disrupted the industry. So basically, you have a bunch of businesses which are cash cows. The end result is there are now 20 active, more than 20 active private equity firms in North America investing in insurance brokering. And that means billions of dollars being invested both south of the border and north of the border. And it's transforming our industry in a lightning fashion. I think it was yesterday, the day before, the announcement that Westlands has took on a capital partner, very significant broker out in British Columbia that's now national. Good for them. So, but acquisitions are now happening every day. So what does this mean? It means that my prediction is in 5 years, there won't be any independent brokers left who are not aligned with something like CBN or who are not very large regional brokers. There's simply too much capital coming in, and it's a trend that's almost impossible to resist. So, and parallel to that is it's almost all American capital. So our industry is becoming very Americanized. And I don't think people are really paying attention to that. Does that really serve the customers well if decisions are made in Chicago and New York, which they increasingly are? And that seems to be pretty unexamined in our industry.
great points. Brooke?
I can only just reinforce the points that Bruce made. And sidebarring to that Marsh-Berry report, when I was thinking things were a little tough sometime in the depths of March or April, I remember reading the Marsh-Berry newsletter talking about how we were the most resilient, best business in the world, thinking, whew. And since then, the number of calls I get per month from U.S. private equity firms and or U.S. M&A advisory firms, and the number of them visiting my LinkedIn profile is pretty funny. Yeah. I have a lot of runway in front of me, and I believe that being fiercely independent and having the ability to align with CBN while being fiercely independent allows me to deliver client value based on my set of values.
Yeah, Brooke, if you ever want to think of selling, we got.
You're putting the deposit down?
That's an official offer.
Offer acceptance.
Jeff?
Yeah, I think both Bruce and Brooke have covered off 98% of it. The average age, I don't know what the average age of the principal owner is. It was around 56 to 60. I'm not sure what it is now after all the acquisitions the last couple of years. I don't think the stats can keep up with reality right now. Yeah. It is such a moving target. And then you've also got, not only equity money, but you get company money. If you're an insurance company and you can buy somebody at 4 times commissions or, 8 to 15 times EBITDA, depending on the setup or your method, you're buying acquisition or distribution at 60, 70 cents in the dollar versus 1-to-1 if you buy the company. So, for a broker like myself that's smaller, that's niche, that's digitally focused, yes, I want a good runway, but for me to get in a bidding war with these guys with big, deep pockets is very difficult, right? And I start looking at my ROI. Can I pay this back in 10 years? You tell me what the industry is going to look like even 5 years from now. Do you want that legacy debt? Are brokers able to carry that legacy debt and make it pay for itself? It becomes a very difficult proposition. And, I remember Intact came out and said you need to be 100 million regionally way before you needed to be, but now 100 million doesn't even seem that big anymore to get the clout and size. So as Bruce said, you need to be aligned with some bigger people. CBN's been great for Excalibur because I've met some really forward thinkers, people doing a lot of things, and we've learned a lot of things about it. We've got some clout and it's fiercely independent. So we're trying to keep the chain in independent brokers. There doesn't seem to be a lot of options. If you want to get the highest price, most people could sell to anybody, but do you care about the chain and the value proposition? Do you want to leave a legacy? Do you want to keep it, in the independent chain? Those are all decisions, and some brokers don't want to see it go into different hands. So a lot of things to think about, but the whole acquisition thing is it's only going to accelerate, and it's still a seller's market, and we'll see where things go the next 3 to 5 years. There's not going to be as many players, and it's soon going to be everybody's going to have all the companies and the clout, and what's going to be the next game to differentiate yourself on, right?
Okay, so the 100 million number, that was a number that was thrown out by Charles Brindamore, CEO of Intact Insurance, who I think is arguably one of the smartest
He's
people
reasonably
in the
smart.
industry.
Yeah,
if not the smartest person in the industry. And so, but you're right, Jeff. That 100 million number, all of a sudden, doesn't seem so large. And when we're talking about even one of the earlier questions we were talking about, the hardening market, it even seems that at that 100 million mark, it's not that big anymore, even for carriers. You almost have to be, I'm almost afraid to say this, but, okay, if you're not presenting, that billion number, that's when, it kind of become the new relevant number for, which is why there's so much consolidation happening, and brokers are realizing really the two big things right now is about consolidation, scale, and technology. Those are the kind of the two big things. But with that consolidation as well, it's not just on the broker side. Like we said, it's on the carrier side as well. We're seeing consolidation on the carrier side, which is a nice segue into my next question. So as as a distributor, so as brokers, we distribute our carrier partners' products. That's what our job is. How would a broker best assess the carrier relationships they have right now and kind of who they align with? So we'll start with Brooke, Bruce, and then Jeff, please.
Well, on that note, I had actually written down is are you a target or are you a buyer? And I think I've been around a long time, so I had a definitive view on which insurers I felt were targets, right? And which won't be expressed here. And that really does underpin how much you're going to invest in that relationship. Stability was my number 2. I hate surprises. Most people do. And 3, do they do what they say they're going to do? So that in the planning sessions when it's agreed on what's going to go down, does it actually happen? And that very specifically as a sub bullet to that is claims performance, because it's our brand is inextricably linked to that claims performance, and some form of analysis as to their channel strategy and where do I sit in their channel strategy.
Awesome.
I agree with Brooke entirely. I would use slightly different words. We try and evaluate insurance companies on their execution, how effective, how quick, how accurate are their frontline underwriters? Can they deliver policies, accurate, quickly? Just that grassroots, that frontline kind of execution. And then the other thing we look at is partnership. Are they aligned with us? And increasingly, that's a complicated question. I think people should realize that increasingly insurance companies are agnostic about who distributes their product. A few years ago, most companies would proclaim their love of the independent brokers. There was just a couple years ago when one big American broker came up and bought $650 million of premium in 1 year in Canada. It was, in fact, more than that. That was just 4 acquisitions, and then they did more. The president of one major insurance company told me, he said, yeah, we don't see anything wrong with that. Before we had to deal with 4 in brokerages and 4 broker presidents. Now we get to deal with 1. So it simplified our world a lot more. So, and when you appreciate that a lot of the big companies are channel agnostic, they're either direct writing or they bought brokers, and they're agnostic as to whether you're an independent Canadian broker or an American broker. And I don't blame them. They have their own business to run. I'm not in any way critical of that whatsoever. But I think it's something that independent brokers need to sit and look at. The agenda of insurance companies is dramatically changed from what it was only a few years ago. And in part, that has to be framed as a reflection that they either perceive that brokers haven't followed consumer behavior online or wherever it is as well as they should have or could have, or they realize that brokers haven't achieved the scale necessary to be good partners to them, and probably a dozen other factors. But insurance companies have their own businesses to run, have their own agendas, and brokers need to be aware that their agendas don't always align with ours. So a true partnership with certain carriers becomes even more important in that environment.
Awesome. Jeff? Oh, Jeff, you're on mute.
Oh, sorry.
There you go. Yeah.
I don't know why it's muting on me, but yeah, I just said my colleagues have done a great job of nailing it down. You know, my favorite line: "Are you a partner or a stakeholder?" I used to hear all the time how partner, 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 and then if something bad happens, and let's say your results are bad and you don't hit certain requirements, are they booting you out the door? Are they working with you? You know, it's been very challenging with black box underwriting, where you give them the risk they think are good, and they only to find out that they're off by 20 points, and you're having a lot of dislocation in your book, moving people around. It's been very challenging that way. And every year they have a new magic bullet or a new algorithm that thinks smarter. Hopefully it is, but you know, it's nice to have a company that's got some stability. You know, basically can set up a win-win relationship, and we can actually, you know, like McCarthy and Lennon, they could write good songs together. They could collaborate. They could riff. Can you riff with your companies when your marketing reps come in? They showed up with ideas how to make your business better, or are they pointing at numbers? You know, there's a difference between stakeholders and partners, and that's what I look for in companies. And they have to have some technology, obviously, based on my reputation and what I've talked on. You know, have they gone to Guidewire and opened up their system? Are they connecting? You know, can they, back to Bruce's statement, can they print a policy properly? Is there accuracy there? You think that's something that's table stakes, but some companies still have struggled to print policies properly and get endorsements out the door. So these are all things that are important and part of a channel strategy. And then again, where are they going to be? As Wayne Gretzky says, where's the puck going? Are they going to get gobbled up in a year? You know, who's going to be left? Which partners can you bank on? And which partners, you know, are supporting the distribution channel of brokers? You know, one of your sponsors, Walmanese, has come out and said, we support brokers 100% and canceled their direct. They put their money where their mouth is. They're not trying to eat their lunch on the direct arm at this point. And again, there's different debates about different business model, etc. You know, we can get into spend days on it, but you know, brokers struggle because one half is helping them and the other half is competing against them. Which side are you dealing with, right? So a lot of interesting questions, but are you a partner or a stakeholder? That's probably about as easy as I can make it.
You guys couldn't have put it any better. I mean, and the reality is too, as a broker, we always have to evaluate, just like any business would evaluate who their partners are, vendors are. It's a constant thing to make sure that your business is well aligned and the partners are supporting your business. All great points. We've got about 5 minutes left, and there's some questions on the Q&A, but there's one question I'm going to ask, one last question, and see if we have any time left for some of the questions. The pandemic has obviously accelerated. We've touched on it. Now let's just tackle it. The pandemic has accelerated the use of technology, and that's what we're really here for. It's all around the technology. This conference, and it's accelerated technology across all sectors in society. I mean, there isn't a business right now that really isn't affected by technology, especially because of the pandemic. So what can brokers do now to ensure they meet their client needs from a technological perspective? And what technology is most important for a broker to look at and concentrate on? I'm going to start with Jeff, and then Brooke, and we're going to end it off with Bruce.
Sherif, you expect me to answer that in 1 minute?
We've got 4 minutes left. So
okay, I'll give you the Coles Notes version. You can watch the presentation I did at Amplify or at the IBO convention where I dove into technology. But just quickly, you have to think of yourself in the insurance business or the experience business first, not the insurance business. And the experience business is the cumulative impact of touch points over time. So you have to basically show up and wow people at every touch point. So whether it's your VoIP phone system, how you answer it, whether it's your chatbot on your website, whether it's your mobile app, you can't afford to be bad in one area because you can do 90% of things right. You do one thing bad, and consumers are not just comparing you to other agents and brokers, they're comparing to other technologies. So if your insurance agency sucks compared to what Apple's doing or what you can do in other areas, that's a huge problem. You have to make sure you're reducing friction, and I talk about first call resolution. You got to make sure if somebody calls in, you can nail that service down right off the bat, not 35 calls. You have to give consumers choice how they interact with you. And if consumers start on the website, they want to finish it that way in single channel. We don't do a super great job of allowing people to quote bind an issue across all products and companies like Applied are coming out with some better solutions. You have BrokerLift and Apollo, and Truthful has got some things. So different things are coming out to do that. So what tech do you need? Just quickly, you have to make sure whatever tech you use improves your productivity, your efficiency, and it improves the customer experience, and you can actually measure it. So to put that into English, you need more than just a BMS or an AMS. Having an Applied just by itself isn't enough. And you'll notice when I was on the digital insurance pint, when we're doing season 2, we interviewed Taylor Rhodes and Theo from Acturis. They're doing some really cool stuff to open up their system. So you have to look at a system that's opened up, because every system can't do everything. You need a commercial management system of some description, whether it's PolicyWorks, whether it's something you've customized yourself. You need to be able to do that. You need a customer-facing mobile app and portal, and you need to basically manage your data. So unfortunately, we don't have more time to go into it, but there's some tidbits to kind of jump into it, Sherif.
Awesome. Thank you. Bruce?
Sorry, Bruce?
Bruce, yeah.
I must have the wrong script. I thought the only answer to this was become a customer truthless. So sorry, I'll have to make up an answer.
$20 for you.
I'll just touch, Jeff covered off a lot. I hear quite often people saying that, well, at least large commercial won't be affected by technology. And I think that's turning a blind eye. So I thought very interesting, Acrisure did, Acrisure, by the way, is the American brokerage that is now doing more broker acquisitions than anybody else in North America. They did more than 90 broker acquisitions last year alone. They bought a $400 million artificial intelligence company. And my understanding is anyways that they expect to apply that to commercial lines. Such things as being able to better prospect and risk matching is already becoming quite a phenomenon in the US. That's using data to build a benchmark clients and prospects. So you're able to go to a prospect and say, well, 100 other different companies in your business pay this kind of rate on this kind of coverage. So technology is coming hard and fast on personal lines, but it's also coming in different ways into larger commercial. And again, brokers have to pay attention.
Awesome. And Brooke?
My first dollar spent as an insurance broker is on security. Starting there. And in terms of commercial, larger commercial, what I'm dreaming of, what I really want for my clients is how can we better collaborate for business insurance, and assuming over the next 5 years we're shifting from selling products to providing services, possibly more fee-based. How do we share better? How do we share information better and while keeping it secure and collaborating? That to me is that's what I dream about on the technology front.
Awesome. I want to give some thoughts on that, but we are out of time. I want to thank my 3 other panelists, my colleagues, Bruce, Brooke, and Jeff. You guys were fantastic. I hope all the attendees got lots from it. Don't forget to check out the next session that's starting right now. Pete Tessier, InsurTech Trends, what's going to impact brokers the most. We'll see you guys at the next session. Thanks so much.
Thanks, Sherif.
Be safe.
Guys.